Hi, welcome to the Market Alert for Thursday, the 3rd of July 2025. So bad news is good news. Stocks, oil, Bitcoin and precious metal surge as US macro melts down. Yesterday's momentum meltdown continues today, as in yesterday, of course. US stocks gained ahead of NFP while President Trump announced a US-Vietnam trade deal. So the trade deals are starting to filter through. Stocks bid and bonds hit ahead of NFP, which is, of course, today, if I'm not mistaken. Let's just double check this. Yeah, non-farm payrolls, because tomorrow the US markets will be closed in observation of the US Independence Day celebrations. So today could be an interesting one, and no doubt the markets will want to finish on a high. Depending on these numbers, the forecast is 111 new jobs outside the agricultural sector. Previous was 139, so let's see what happens with regards to those. So that's the news from yesterday and what we can expect during today. Tomorrow we can expect a very quiet day, one directional though I suspect, given the markets are currently sitting on the highs. But let's have a look and see what the markets did yesterday and kick off with the Dow. So yesterday the Dow continuing to stay above the 5-bar moving average and heading back towards that 45,077 level. A couple of resistance areas in the way, but the non-farm payrolls are out today if they come in better than forecast. And even if they don't, it's likely that they're going to use the news to move the markets to the upside. So the trend remains intact for the Dow. Get my teeth in this morning. And in the 30-minute chart, so we had a bit of selling mid-morning, the cash market opening, but they soon bought back into it, moved the market up, and at the moment we're above the DP. Got a bit to go to get back towards the high of yesterday, which is tucked away just there at 44,660. So yeah, we've got to take out yesterday's with this Tuesday's high, and then yesterday's high there. So we managed to break the previous day's high, but then we had a bit of selling in the cash market before finding support overnight at the DP. In the German DAX, still struggling a bit at the moment, but finding support at the 20-bar moving average for the second day. Prices are sideways at the moment, but they need to get back above the 5-bar moving average. As we saw earlier on in the year when Trump was inaugurated, the US markets romped ahead and the DAX didn't. And as I said then, and I'll say now, the DAX will play catch up very shortly, as it did then, and then made its new all-time highs. We've got a recent all-time high, obviously, which we've seen a bit of a pullback from, but we need to get back to this level 24,487 in order to continue to move higher. The positives are that the market is above the 20-bar moving average. The negatives are that the momentum has disappeared out of the market, and we need to see this return back to the upside in order to continue the move to the upside. In yesterday's trading session, again, we were sideways to lower on the open, and then we had a big shakeout at lunchtime, and then the market moving back overnight. We need to take out the 200 MA and the high of yesterday in order to continue to the upside. Fortunately for the DAX, the NFP numbers will be released at 1:30 p.m. And in the S&P 500, we continue to make new all-time highs. We've got another one overnight. There's nothing stopping this at the moment, 6234.6. And in the 30-minute chart, despite a pullback and profit-taking in the cash market at 230 when the S&P kicked in, you can see the buying coming back into the market, and it's straight up. We've already breached yesterday's high, which is why, of course, we've got the all-time high in the daily chart, and of course, well, in the daily chart, in the overnight chart, which is there, of course. Let me just put that in, see if it will work. There we go, 6234. Let me just resize the chart so we can see this. That's better. So we're sitting at the 6234 level at the moment, already above the high. So we can expect more in the S&P 500, new all-time highs, because we've got the NFP numbers later today. Meanwhile, in the UK, bit of a sorry state. Poor old Rachel from accounts, very obviously upset about things. No idea what's going on there, apart from maybe she's bitten off more than she can chew. And speaking of which, I'm just going to digress slightly here and have a look at the UK debt. I thought I'd have a look at it this morning when I was awake at about 4:30. And if you want to see the UK debt, and I think she's been painted into a corner, to be honest with you, the current debt is 2.7 trillion. We're talking of it increasing per second at 5,000. It's no big deal at the moment. Well, say it's no big deal. Of course, it's a big deal. But if you have a look at the, I was asking lots of questions about it. But if we just get to the summary of everything that I was asking about interest payments and all the rest of it, I didn't realise that if we get to the bottom of this, it was a busy half an hour or so. And I was looking at the percentage of tax receipts to what she's paid in, obviously, in interest payments. And so I said, are we at any sort of risk? And it says high burden on revenue is around 10%. Meaning less room for spending on public services or tax relief, so she's got to raise rates, and of course it's all going pear-shaped because there's a rebellion. Risk threshold: once interest payments regularly exceed 10 to 12% of income, which is where we're at, it's widely seen as unsustainable and triggers market concerns, and UK is flirting with the danger at 10% of the UK is entering pressure territory. So in summary, the interest payments on the debt are thus interest payments 110 billion a year, while tax revenue is 1.06 trillion. So need a bit more money to get this below the 10%. The interest to revenue ratio is 10%, and they're dangerously high by historical and economic standards. So she knows this is going on, trying to raise revenue, cut spending, and it's not working. It's incredibly I would say frustrating for us. So the UK is nearing the unsustainability threshold. Persistent position above this could compel tax rises, spending cuts, or restructuring of the debt. They've got the tools to do it. They could cut rates. They could print more money. At the moment, they're quantitative tightening. So again, there is room. But so it was an interesting day yesterday for the UK government. I think from a humanitarian point of view, although I'm not fond of Rachel from accounts, or particularly what she's doing, don't know her personally, but like I say, from a humanitarian point of view, I found it despicable that none of her colleagues were there to actually comfort her, or even to say that she should leave the chambers. But that's my own opinion there. So she's obviously under immense pressure, and you can see why when you start looking at the debt situation. It's growing at 5,000 a second, which is a massive problem for anybody. But she's got Bob open, no open. I suspect she'll be gone by the end of this month, and Starmer to follow shortly as well. Right, let's get back to the markets. Which one were we looking at? We were at the FT 100. This managing to put in an update despite what's going on in Westminster. And there you can see, obviously, we had a bit of a wobble around PMQs, and then the market moving back to the upside there at the DP and the close. Right, let's have a look at the US dollar. And the US dollar, you can see there the market sideways at the moment, obviously waiting for the NFP numbers. So let's move along and have a look at the metals. So in the metals, silver allowed to move up yesterday. I suspect not today or tomorrow as we head into Smackdown Friday. But certainly some supply there, a lot of volume sticking out there. The momentum is to the upside as well with the stochastics. We just need to get above the 20-bar moving average. But given it's Independence Day tomorrow, we can expect to see the quiet markets, the electronic markets, with the price of silver pushed lower. Have a look at the 30-minute chart. Yesterday it was allowed to move higher, and even the LBMA markdown was only a matter of 30 minutes before the market resumed to the upside. We could be on the cusp of a break back above the 36.50, but we'll see what happens. Meanwhile, in gold, yesterday sideways to higher again. You've got that volume there as well, and the momentum to the upside. They're starting to absorb the sell trades that are coming into the market as we see that supply there. 30-minute chart slammed overnight, but now regaining there. So gold up yesterday, coming off the DP and the 50 bar EMA there as well. Right, let's have a quick look at the gold-silver ratio. And in the gold-silver ratio, down slightly yesterday as silver started to move to the upside, and also overnight sideways there as well. So not a lot to report. We've still got that sort of trend to the downside and resistance. Hopefully we will head in this direction, but we'll have to wait and see. Right, a quick look at yesterday's trades. And in the pre-market session, we were just stuck in a range, and during the day, the market opened, moved to the upside, and then sailed to the downside, which you can see there, down to the close, and then finding support there until we get the shakeout, which you see there, before moving back to the upside there. Then we had another sell signal. Market went down and found support to the left, and also where the market had taken off from. And prices then reversed off this, which you can see with a potential buy signal, trading up to the resistance and the 50 EMA there, the psychological level as well, the BRN. Then we get a bit of selling coming in. We then absorb the selling, breakthrough, and then head up towards the 200 MA before prices then hit it and then go through it. And then we come back to the DP and find resistance just at the psychological level, just as we did previously in the morning, and then sideways to lower, and then we get stuck in a bit of a sideways move there as we head into the cutoff period at 10 a.m. and then as we go through the market, very choppy all the way back down to the close, and then into the economic news yesterday. And then the market moving all the way down to the low, which you can see there. So the market at the low and then comes back and retests the low. On this occasion, it didn't take out the low to get people to go short and then buy back. It actually picked up off the low there. So before the US market opened, we're moving back to the upside, which you can see there. And then we kick off with prices sideways to lower. And then again, that close that we saw dominate the morning session, once again coming in as a bit of a support market trying to go through this, and it does. And then through the economic news, prices then continue to move sideways to higher, and then just continue all the way up until the market is slammed. I don't know what that news item was, but obviously the market wasn't happy with it, and then prices came back. They soon bought back though. It's got the shakeout. Let's get rid of these few longs. Let's have a few cheap contracts and then move the market back to the upside there to around 89% of this move, before prices then sold back to the downside there, which you can see. And then into the evening, the market just sideways and stuck in a range. But where we're currently trading is at, again, between the close and the high. We've got the 200 MA, we've got the close there, and there's the high that needs to be taken out, which is probably going to happen at 7 a.m. when the futures come on stream in the next half an hour. Right, that will do it for this one. Let's see what happens with these NFP numbers at 1:30. So with that, have a great day, and as ever, thanks for watching. See you in the next one.